You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Well, it's important that we talk about this, don't you think? Hey, hi, welcome to Talking Real Money. I'm Don McDonald. Over there's Tom Cock. We are the co-hosts of Talking Real Money and have been since its inception about, a long time ago. Long time ago.
You said that very quickly, and
I know. I'm practicing. I was watching.
Right.
I was watching Jim Cramer, so I'm trying to talk as fast as Jim Cramer talks because but I can't.
He really goes on fast. You got to stop and think. Wow. Did he just say what I think?
I don't even know what he said. And the reason I'm saying that. Oh, let me give you the phone number first. 855-93-TALK. 855-935-8255 because you can.
Come on, 855.
You know, are you cutting out again?
9.
Oh, we got to fire Comcast, dude. Did you ever check to see if you have a phone company in your neighborhood?
I told no one heard of it. And the broadband people, they just said no.
Oh, did you talk to them finally? And they said no?
Yeah. Mm-hmm.
Okay.
Nope.
Did you ask your neighbors if you have a phone company?
I don't know. I'm afraid of my neighbors. Anything. I don't think I'm very popular here. I kind of hide in my house, as you know.
All right.
Drive out very quickly. You're going to get me Musk's. Put it up on the roof or something.
Dee, I don't know if it's working yet. Dee, do me a favor. Go visit one of the neighbors. They'll probably talk to you. I can understand why they wouldn't talk to Tom. And ask if there's a local phone company from whom we can get broadband. I just want to know. Because it goes,
we should pick up.
Yeah, just like
that.
All
right, Jim Cramer.
Anyway, I forgot.
And the reason we're talking about Cramer is.
All right, he did a video, and he's.
Of course he did.
He's so funny. Well, he's on TV. But he's trying to explain why stocks like Disney, and that was the one he was focusing on in this video, why Disney is the same price today as it was in January before COVID. With all the bad stuff that's going on. And no, don't give it away.
Oh, don't give it. Okay.
Don't give it away.
Cutting to the chase.
We're going to cut to not to the chase. We're going to cut to the Cramer.
Go.
I'm not picking stocks that actually benefit the coaches.
You can't hear it?
Not very loud. And how many times can you say that about Jim Cramer, that he's not very loud?
Wow, that's weird. Okay, I'm going to turn it off.
Yeah.
Okay. Oh, I'm playing it
now
here.
It's not going to stop.
I often wonder, who are these guys?
That's better.
Look through the valleys to the good numbers. How is it possible they don't care about the near term? How can they be so ridiculously optimistic? Again, these are paying gloss buyers. They're pulling the trigger like all.
What was that word?
Paying gloss buyers?
I don't. Possible worlds. I have to believe. You know who I think this is the work of?
Yes.
Youth.
Utes?
Callow youth. No one who's been in the business for any length of time in the last 30 years would make these trades, would own these stocks up here. They're too obvious. I've only seen this kind of action once before, in the 1980s, where stocks that went to 80, then cruised to 90, then cruised to 100, then cruised to 120. Don't laugh. That was my sales pitch to a lot of people, a lot of jaded people, like many people are now. And it always worked because we were in one of those rare moments where you had to throw your discipline out the window, or at least that kind of discipline. It's a moment like this one. New discipline. Crazy discipline. Faith.
So throw your out the window and just buy stocks? Is that what he's saying?
That's what he said. He was in the business like I was in the 80s. We're about the same age, apparently. Because I was in my 20s when I got in the business. So he was in the 80s.
He ran a hedge fund then.
And he's telling people back then, you just got to keep buying these stocks. They're going up, they're going up, they're going up, they're going up, like that. But here's the thing. Before we get to that, there were about 30 words that I didn't even understand because he said them so quickly.
He was very fast there.
Was that fast? Was that like Jim Cramer on speed?
Yeah. I don't know what he's on.
Is that how he normally is? I never watched.
I'm more disturbed that he's blaming the Utes of America. That's the part that's upsetting to me.
Yeah. My cousin Vinny over there, the Utes.
Yeah, well, I figure Giuliani can cite it. I can too. Right? So why not?
But that is funny that he's saying it's the young people, but when in fact it's people. It's just,
this is the part. Okay, we went through this. We've gone through this with many people before. I think most famously, Bill Gross and Jeffrey Gundlach, who complained night and day about what the Federal Reserve's doing and how that's not impacting the bond market the way that it should be.
Right. The market isn't doing what it's supposed to do.
Because the way my bet was, it's not working out for my bet.
Now,
yeah.
But here's the thing with Jim. He's been in this business a long time. Wait, let me do it again. He's been in this business a long time.
You got to take a couple 5-hour energies or something.
And doesn't he realize that the stock market doesn't react to events that are happening currently? That it's forward-looking? It's anticipating better times ahead for the Walt Disney Company and all of those
Disney's
others?
a great company. Yeah, he admits that. But
yeah.
It shouldn't be trading where it is today. Wait a minute. It is trading where it is today.
Because the market is smarter than the experts. 855-935-TALK.
Are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
For your real life and real future, Tom and Don are talking real money.
You're going to be still... What?
I still laugh. I just think it's funny because
Tom sits here and laughs during the break. What?
Well, I know because isn't it always true that your generation blames the next one? They don't know what they're talking about. They always got all those people because
all those young people.
The same thing.
I gotta tell you though,
bucks.
I saw my sister-in-law recently, and she's grilling me about day trading. She's in her 60s,
goodness.
and
so she's not among the youth.
She's not a youth, but
Disney
she's day trading. And she's buying the things that she thinks are hot. We'll talk more about that in a minute. 855-935-TALK is our phone number, 855-935-8255. Michelle, welcome to Talking Real Money.
Are you one of the youths of which we speak?
Hey, Michelle.
Hi. Hey, I had a question. I work for government, and I have a 457B deferred comp plan. And they recently just started offering, probably a year or two ago, a Roth IRA in addition to the regular 457B. And I am contributing to both. And so my question is, how much should I contribute to each one of them? So I've been contributing to the regular 457B for 18 plus years. I have 140, almost 144,000 in there. Part of that's in the Roth because I just started contributing to that. So right now I'm contributing, I believe, $70 a month to the 457B, the regular one, and then $60 a month, not a month, per pay period. I get paid every 2 weeks. And then I'm contributing $60.
Okay, let me start with the question that I hate asking, but how old are you?
47.
47.
Oh,
okay.
So you're still...
Yeah, you're younger.
Now, we can call you one of the youths of America.
She's
that
not
age.
a youth.
Oh, okay. Pardon me.
But here's the deal: the split between Roth and taxable at retirement investments,
pre-tax and post-tax.
It's an art rather than a science.
Yeah, no, I think that's true. So here's the way I'd look at it. I mean, one thing is when you retire, are you going to be eligible for a pension that is going to be taxable or not?
Oh, that is a good question. Yes, I am.
Because here's at the end of the day, what you.
Taxable.
Well, are you going to get a pension?
You're going to get a pension?
Yeah. Okay.
Yeah.
So she'll have a pension.
And so here's the way it lines up for me anyway. I mean, it's tax rate today versus tax rate in the future. We don't know what the tax rate technically will be when you retire, right? In 15, 20 years, whatever.
Heck, not even technically. We have no clue.
We have no clue what it'll be in January. But anyway, so that's one. But will your generally income be less in the future than it is today? Yeah, probably, because you're not going to be earning an income. But if you're getting a pension, you're getting Social Security, et cetera. So here's the way I would look at it. If today your tax rate is still relatively low, and I don't know if you work for the government, where it shakes out, I think a split at 47 makes sense because you're hedging your bets a little bit, right? You're saying, I'm paying some tax today. on the Roth part. I'm not paying tax on the other. One grows tax-free. The other grows tax-deferred. You're kind of hedging your bets a little bit. So I think a 50-50 split at age 47, probably okay.
Yeah, it's a split in the baby kind of approach. It's very biblical. And here's how I look at it. If you had at this point, after you'd been saving for a while, you made a lot of money, you were in a high paying job, and you had $1 million saved by today, or a big chunk, then I would say overemphasize the Roth, because you're probably going to end up in a higher tax bracket in retirement. But with the 144, you're on a good track to a decent, comfortable retirement, but you're probably not, barring any unforeseen major tax law changes, you're probably not going to be in a dramatically higher bracket. So I think Tom's right. Split it up.
Another thing to think about, by the way, in terms of the taking money out part, now, as you know, they pushed it back to 72. However, if the money's in a Roth 457 or 401k, you have to start taking that out. Whereas I think it's before that. Anyway, so the rules are a little bit different when it comes to the Roth portion, which is also a consideration. So I think just splitting it, again, we don't know in the future. Generally, your tax rate would be lower in retirement. Probably makes pretty good sense.
Yeah, I concur. Does that help?
Really quick, if I may. It does a little bit, other than in my 457B, the pre-tax, that has far more money, a lot more money in it than the Roth. Mm-hmm. And so should I play catch-up, or should I just 50-50 split?
Well, what is your tax rate? What is your what?
How much? What kind of income do you have today?
Yeah, give us your income.
Sorry,
what's your current taxable income?
My gross. My taxable income's probably about 94 a year, 94,000 a year.
Probably going to be in a lower tax bracket in retirement.
Yeah.
Okay. No, I don't. I think you should stick with what you have and just start splitting from here, because it just again, if you had a huge amount, I'd say sure, catch up on that Roth. But at this juncture, plus it's giving you a tax deduction today. Are you single or married?
Single right now, but we'll be married soon.
Okay, and does he have a substantial income?
It's about
better.
He's a little bit more, but close.
Oh, that's good, though. That's going to put you.
No, that's great.
It's important. I think the deduction is really probably working a little better for you, because you'll probably be in a lower bracket. Probably. Now, we got the husband coming
still
up.
Very gray.
It's still very gray.
I think a 50-50 split.
Down the road, going forward.
Mm-hmm. No reason to jump it up to try to reach the 144 you have in the
And then after you get married, let's look at the whole thing and try to figure it all out together and make sure that you're on the right track then. Okay?
Yeah.
Very good. Thank you so much.
All right. Thanks, Michelle. 855-935-TALK.
Like the way I threw that in there.
What?
Income? Do you think that was? She said, you asked him how much income he has. He better have a big income.
Yeah. He has as good as hers. That's fair.
Okay, that's good. Yeah, that's good. That's good. I like.
I wish my wife had as big an income as I have.
I am going to be absolute. I have no idea what my wife's income is going to be this year. It'll be
No.
She runs the food trucks. It's going to be small.
You have no idea.
Yeah, it's going to be very small. Though,
for 20?
It's been a horrible year.
For 2020?
Horrible year. And I don't think 2021 is going to be a whole lot better. Because remember, some of those major tech firms that she does the work for, they've already said they're not even going to have people back in the office till like mid next year. That means they won't have any big events. It's going to be slow go. So anyway,
tough economy for food.
But bless her, she's got the Christmas stuff up already. So there you go. It all evens out.
It's very festive there at the Cock Home.
You would be surprised. Just there's already a couple of trees,
or as we call it, the chicken coop.
The chicken coop. More appropriate.
855-935-8255. That's our phone number. Give us a call. 855-935-TALK. This is one of the things that we run into a lot, is this desire for an absolute answer now about the future. And this is where we really struggle, is because we know something and we're going to actually be honest about it. We don't know the future. Now, there are a lot of other people out there who claim to know the future, but they don't know it either.
I know two futures, death and taxes. Other than that, it's all a guess. So beyond that, I couldn't really tell you.
If I got broke enough, there might not even be taxes, but there will definitely be death.
That's true.
So,
it awaits us all.
Yeah, darn it. 855-935-TALK. Give us a call. We will try and help you make more sense out of this important stuff called money.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
Real money, real life, really important. That's why we're really here almost, well, have we not been here for a Saturday? I think one Saturday in all these years we didn't actually do a live show.
And you know, we have one of those little things, I don't know what those are called, kitchen that shows the pictures. And it always shows a year ago. You know where I was a year ago? I'll just tell you right now, I went to the show, and it was a place sunnier and much warmer.
Oh, were you in Mexico?
Yeah.
Yeah.
I hate pictures keep popping up. I'm like,
yes,
shut it down.
I did the show.
Oh, you did the show. We've never, I don't think we've ever had a recorded program.
Yes, we did for retirement.
Or do you have one?
Retirement.
Oh, okay. But otherwise, we're here. And by the way, program reminder, we'll be here for the holidays because where else would we be?
Where would you go?
I know.
No, we can't go anywhere. All right, 855-935-TALK is our phone number here. And Mike, you're up next. Welcome to Talking Real Money.
Hi, Mike.
Oh, hello. How are you?
Good. Thanks.
All right. Good. I have a couple of questions about how do I separate, one particular advisor for another if I'm looking to make a change. And, everyone wants to know what I'm currently doing. And how do I get the most out of people's help?
How do I get the most out of people's help? That's intriguing.
I mean, from the standpoint of not getting confused by one advisor or another advisor coming up with a different plan. And then when you study that, you find out that they're very similar.
Well, there should be almost, they should be, if someone was doing what they're supposed to do, they should be almost identical from one advisor to another in terms of the investment portfolio.
Are you really asking sort of how do you comparison shop between one advisor and another?
Yeah, that's certainly part of it. Yes.
I mean, so here would be my rules. Number one, I would only even talk as a prospective advisor to a registered investment advisory that's 100% registered, not duly registered. That's one. I would only talk to people that charge 1% a year or less. And then here's where the rubber, I think, also meets the road. This is me, and this is a decision every one of you has to make on your own. I would only talk to somebody that uses a passive or index style management, because once you start veering off from there, you get into high expense funds, you get into people that think they can see the future. Those are my rules. Because we run into a lot of people that they go talk to them and they say, well, he said he's 100% fiduciary. Well, they are, but they're just using lousy products that I don't think you should be in. Go ahead, Don.
Yeah. And the other thing is I want someone who is from the get-go totally transparent. Totally transparent. No opacity at all. When you say, how much do you charge? They actually tell you. They don't hem and haw and go, well, we're going to get some on the backside.
Up front.
Yep. Totally up front. And then, as Ronald Reagan said, trust but verify. Look them up.
After those first three things, then you're going to get into, is it a good match from a personality standpoint? And Don pointed out last hour, every advisor's nice because they want your business, but you got to find out how often they contact you, what sort of planning they do, how available they are. We just talked to somebody yesterday. We reach out to every client every quarter because we want to know what's going on in your life. So those are the kind of things you should know.
And you're not going to like this part. When you look them up, you need to actually read the boring stuff.
Well,
and where do you go look them up, Don?
Yeah. Have you ever, on these two advisors, have you gone to the SEC website where their ADVs are?
not in the last 6 months.
It's advisor. It's advisorinfo.sec.gov. And you really need to actually read. And by the way, here's an interesting way to determine whether or not this is someone you want to deal with. If their ADV is over about 20 or 30 pages long,
ridiculous.
Toss them in the trash, because it means they're hiding a lot of stuff in a lot of legalese. You want somebody with a nice, short, understandable ADV Part 2. Shows you how much they manage, how they manage money, and how much they charge. So go check them out. Trust, but verify. 855-935-TALK.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Reality radio for a really great future. We're talking real money.
As we do live every Saturday on Como Radio in Seattle, and then we do like every day in our podcast, pretty much every day.
7 days a week.
Well, we try to do 7 days a week unless Don takes a day off. Sometimes we don't.
No days off.
I'm tired.
Excuse me?
I'm tired.
You're like the 36-year-old guy who's tired.
I'm tired.
I came that close to saying
yeah, he's 36. I'm 64 and I'm tired.
Yeah, let's not get tired, okay, at 36, but he's had
I can be tired at 64.
Fair. Yeah, I think that's okay.
Thank
but 36, not so much.
I mean, come on. 50 years ago, I'd be dead by now.
Good point.
855-935-TALK is our phone number. Give us a call. We'd love to help you manage your money better. Kara, welcome to Talking Real Money. Your turn.
Hi, how are you?
We're good, thanks. Thanks for calling.
Yeah,
What's up?
So I just wanted a little bit of investment advice. So I am 33 years old, and right now I have some money invested in a pre-tax contribution into my 401k, and I've just recently kind of played around a little bit with index funds and invested a little bit into that on my own. I've got virtually no debt with the exception of my mortgage. And the biggest thing is I've got about $100K sitting in my checking. And I just feel like it's kind of going to waste there. I feel like I would like to invest some of it.
You should see us both. We're both nodding our heads. Yes. We're both going like, wow. Yes. Yes.
Yeah.
$100,000?
I just really don't know where to kind of, where I should go about investing that, given my age. I don't want to do anything too risky.
Wait a minute. Didn't you say you're 33?
Whoa.
Okay, I'm tired. I'm tired of this. We had the guy who's 36 and he said, I'm too tired. Now we've got a woman who's 33 and she says she's too old to take risk.
You should be taking a lot of risk at 33. A lot of risk.
Okay, well, and I just don't know really kind of what my options are with that. Right. I have a pretty steady income, so
good.
That money is essentially
that's important.
Let's go back. Let's go back. Are you married? Are you married or single? You married or single?
Single.
Yeah, Tom. Okay. Don't get any ideas. Stop it.
I'm sorry. Okay, and what is your income?
He's old. He's old.
Roughly.
He's old.
I'm really old.
Yeah.
What's your income? You're safe.
$130,000 a year.
Oh yeah, she just makes a little.
Okay. So you're not eligible to do a Roth IRA at $130,000.
Wait a minute, you're getting ahead of the curve.
Right,
I thought you were going to go in the right spot first. No, okay, all right, go ahead. Go ahead, Kara.
I should mention that.
She has something else to add.
My taxable income is $105K, and the rest is from military disability retirement.
That's okay. That's good. I mean, all that's great. Here's the thing: you got $100,000 in the bank. Some of that, I would assume, and I'm making a big assumption, is for emergencies. Like you can't work for a while, right?
Yes, I have two children too, two little boys. So.
Yeah. All right. So you're going to need some emergency money. What's your annual? What are your annual household expenses? If you had to not work for a year, how much would you need to pay the bills for a year?
Probably about $3,000 a month with the mortgage,
That's all?
utilities,
So
groceries.
You're good. All right. So you need to have about $40,000 immediately available in some very short-term, very safe vehicle.
Right.
The rest of that money, the other $60,000, is that money you would like to see grow for your retirement in about 35 years?
I would, but mostly I really have my eye on some short-term investment options more than anything, which I know puts me in looking into more of the high-risk categories.
Tell me, what do you mean by short-term investment options?
What
kind of?
I guess a shorter term, high return in a shorter amount of time, something that I can reinvest and grow over time.
Oh, do tell us. We want to know what that is.
No, I guess I'm confused. So you want to make a lot more money in the short term so you can invest it for the long term?
Yeah, kind of. I think that's what I'm thinking. That's probably why I'm calling you guys.
Okay.
I haven't read that book.
I'm
I'm waiting.
Sure yeah.
Here's the thing. If you want to grow the money in the short term for some other purpose, great. That's wonderful. It's like to buy a house or pay kids college education. Now, one of the things you probably should do if you haven't funded your kids' college education is look at the Utah TS 529 plan at my529.com. But really, your primary goal should be your retirement if you don't have another purpose.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, vestory.com.
For your real life and real future, Tom and Don are talking real money.
All right. I've had the break to think about it, and I've kind of got this all clear. I think I've cleared it all up for you, Kara. All right, I got it all clear.
Before you get into that, can I say one thing?
No,
okay,
go ahead. I was on a roll.
No, just very quickly.
I'm going to
because I'm going to talk about the tax part, and then you can talk about the investing part. Right. Number one, she should, because even if she doesn't have the cash flow regularly from her job, she has the money. She should make sure she maxes out her 401k, which I think is around $17,500. Right? That's number one.
Right.
No brainer. Number two, you correctly point out. Then the next thing would be maybe to save something for her sons for their higher education, and we like the Utah 529.
Right.
That's it when it comes to the tax part. Then you're going to tell her how to get rich quick is what she wants to know.
Here's what I was going to say I figured this out. Kara, here's what you want. You want what everybody else wants. You want to make a big killing on Wall Street. Buying something, or a big killing in real estate, or a big killing in something right now, which in our vernacular is called gambling. You do not want, even at 33 years old, you don't want to gamble with your future. What you should do is all those things we just said. Max out your 401, save for your kids' college, and then the rest needs to be saved for your long-term future. There's no such thing as making a bunch of short-term money without taking a bunch of ridiculous gambling-style risk. And the way you said you were dabbling, I think you said playing in index funds. It's not really playing because they're real investments. It would be so simple just to take a big chunk of that money after you've done all these other things and put it into VT, which is the Vanguard Total World Stock ETF.
And one of our best clients just texted me and said, it's $19,500, you dunderhead. You could put in the
it is 19
under the age of 50.
It's 19.5.
I forget. They change the number every, 19.5. That'll be good till the end of the year.
19.5, and then it's a 65.
Mary from Bellevue.
Is it a $6,500 catch-up? No, it's $5,500. No. Wait a minute.
Ask your provider.
It's a $7,500 catch-up. Yes, that is correct.
This year it's 25. Next year it's 26 total for people over 50.
In 2021, it's 26,000 total.
All right, it's something like that.
Because that's how much I'm going to be putting in mine because I'm old.
Okay. But by the way, the other good news for Kara is that I think despite the governor's orders, the casinos are still open and available.
Yeah, but in our book, that's, bad.
I think you just said something about gambling.
It's bad.
That's gambling.
It's not a good idea.
No, I wouldn't put my future on black or red or roulette
or Amazon or Disney or.
Oh yeah, well no, actually I would on Disney because Jim Cramer says
it's going to go down.
I think that has to go up pretty much after Cramer said
it's the Cramer contrarian theory.
I would buy the opposite.
Whenever Jim says, do the opposite.
As soon as he said that, Disney, baby, boom.
Yeah,
get in now.
I was reading a thing from of course, they're among my favorite people in the world, the Motley Fool. The Motley Fool. Yeah. And the Motley Fool, they had an article from one of their fool people. That was the five
things you have to, what was it? The 5 must-follow rules for every investment.
Yeah, 5 must-follow rules. And the first one basically is the same stupid rule that we keep hearing over and over and over and over and over.
They had the same rule 25 years ago.
Buy what you know.
Only buy the stocks you understand.
Yeah. No.
Okay, you don't understand them.
And then they go on, though, to give you all the good advice. They start with the really bad stuff, buy individual stocks, and then later they go, diversify. Wait, how do you buy individual stocks and diversify? You don't have enough money.
And keep your fees low. By the way, these are the same people that told you 20 years ago, don't buy mutual funds because you're paying someone for a service you don't need.
And then
you go pick up your own portfolio.
And then they write articles that say buy an index fund.
Let's finish the thought. I mean, only buy what you know. You don't know how Amazon, how many of you really know that Amazon makes most of its money through their cloud service? No, you don't really know that. How many of you know how really does Starbucks make money by, dealing with the coffee growers to make the money that way? Or is it the fact that we don't know? Those publicly traded companies are huge. There's all kinds of things you do. And you have no idea what the future may look like. Absolutely not. What you want to do instead is own the market and get market returns. Those have been great for a long period of time. It is really an awful thing to say to people.
Well, because you cannot know what everybody knows in aggregate. You can't know all of everything everybody knows. And you have to understand that every time you buy a stock, there's somebody probably smarter than you selling it to you.
Bingo.
Andrew,
Andrew,
we've got a minute. We got a couple minutes. We'll sneak your question in. Hi, Andrew. Welcome to Talking Real Money.
I just heard you talk about the Total World Fund with Vanguard, and I was invited to an ultra high net worth conference with Vanguard in Laguna Niguel. And if you look at the data on their funds, hands down, total stock market and VFIAX, which is the S&P 500, beat all of the other funds, especially if you don't have a timing consideration on when you need to get out. So if you have a long time
over what period of time?
Nothing comes close to those two.
Yeah, and really, with over the longer time horizon, the total world has beaten the 500. Yeah. But they both have periods where they, for example, in 2000 to 2010, the 500 dramatically underperformed. 2010 plus, the S&P 500 outperformed. So it really does, as Tom said, it depends on the period you're looking at. But you're absolutely right. Why buy all this other stuff when the indexes win?
The indexes crush everything.
Yeah, that's why.
Thank you, Andrew.
That's why, Andrew. We keep telling people, and we're so glad that you reinforce that. We keep doing this over and over and over again. I keep telling you that this is not complicated. Investing is too easy to be as hard as we make it.
And again, we started the show saying, do not combine your investments with insurance products. That's a no-brainer. Don't take advice from people that are telling you that's different this time, or here's what you need to know right now, because those people are selling you a newsletter, a book, or
an annuity,
silly TV show, because that's what their job is to do, versus the academic work where they aren't selling anything. They don't care. That's who you want to trust.
And there is nothing new under the investment sun. There's nothing new. Now, the one new thing that has come along over the past several decades is the ETF, the Exchange Traded Fund, which is a very cool concept. But it doesn't make more money than the old-fashioned index fund that it it mimics. It's just a slightly maybe more efficient way of doing it. That's all. But there's
less
no
expensive
way,
and more tax efficient.
Yeah, but there's no way to create a vehicle that makes more money than the market with the exact same long-term risk of the market. It's just not possible. Otherwise, why would people buy stocks?
Exactly. And that's, again, where we started the show. When there's some program that an insurance company offers you that says, well, you get 6 or 7% a year with none of the risk of the market.
And that's just not true, by the way. They can make those claims, but you never find them in their disclosure documents. It's funny. If you read the disclosure documents, and I can see why people don't read them, because that one person did send the disclosure documents they got on that whole life policy, and it was 50 pages of really fine print that was, I mean, it was confusing me, and I've been in this business for a very long time, and it took me a while to muddle through it, and I went, oh, there it is. This is not what they said.
I'm going to wish you all a happy Thanksgiving. Please do have gratitude for all that we have in a year that we might not have as much as we might otherwise, right? No? All right, you're laughing.
I'm just going to go get a little turkey, just a little tiny one. I think they call them Cornish game hens.
I think you're right. They're not bad either. Yeah.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you're just hanging out, socially distancing at your home over the Thanksgiving week, well, maybe you can take advantage of that time, get a little help with your financial situation. If you have one of those hodgepodge portfolios, it's got all this garbage in it, or you're trying to build a plan for a long-term future, bug our advisors. They'll work with you for free, really, and they won't try to sell you anything. All you do is go to vestory.com and set up an appointment. vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.